analysis, the more convincing your business case will be. So, and this, I'm always saying tax in-house people, they need to be multilingual. So on the one hand side, be in a position to talk business with the business people and the CFO, of course. And at the very same time, be in a position to talk tax with tax advisors, tax auditors. So you need to be multilingual.
Welcome to another episode of Tax Leaders Unplugged. Our guest today is Katharina Herzog. Katharina is a Senior VP Group Finance and Tax at Hugo Boss, and she is based out of Germany. She has a career of over 16 years at Hugo Boss already. And before, Katharina had different finance roles at T-Systems. And she started her career at KPMG, but not in tax. We are going to talk today about Katharina's special responsibility of combining finance and tax and other things. And we will also discuss what it takes to build a convincing business case as a tax function for the CFO. Welcome, Katharina.
Thanks, Stevi. I'm very much looking forward to our conversation. And finally, we made it. Sorry for my scratchy voice, but in Germany it's fall, and this is cold season, and there are a lot of viruses floating around. But I'm in general doing good and happy to be with us today.
The time of the year, no problem. Katharina, outside of the tax world, what are some of your hobbies and interests that people might be surprised maybe to learn about?
Well, I'm a number person. That's why I'm working in finance and tax. But apart from that, I love really archaeology and history. Before deciding to go for an economic study, I really wanted to pursue a career like Indiana Jones and find the hidden treasures of the world. But then my grandparents told me, girl, you don't want to earn a fortune. You will not earn a fortune with that. Better do something that gives you a good living. And that's why I pursued studies in economics and started a career in finance and tax.
All right. Interesting. So we already saw in your background that you indeed started not in tax. So in your case, you started in finance, and then over time you evolved into a combined career of finance and tax. Can you explain a bit more to the audience how all of this happened, how you as a finance person got attracted to the tax audience, tax scene, and how you rolled into it?
Yeah, of course. So, I started my career at KPMG in IT consulting, and then shortly after joined a client of KPMG to work in the group accounting department. So I still would call the group accounting department my home turf, where I still feel most comfortable with, because I also majored in group accounting at university. But then over the time, I got insights due to my mentor, who was very strong in tax, in the broader discipline of finance and tax. And I really found out that both finance and tax need to work closely together to bring the best value for the company you're working for. And that's why, I'm really happy to now lead a team of 80 dedicated professionals in finance and tax.
And what did it take for you as a finance professional to catch up with the complexity of the tax domain? Can you explain a bit the different steps you took and maybe some of the experiences you had? Was it a pleasant experience of learning into the tax domain, or was it a hard one?
Well, some things come naturally to me. Let's say tax accounting and transfer pricing, these are really easy to understand for a finance person. And so I was very much looking forward to work with the tax people on transfer pricing and tax accounting topics. But when it comes to the nuances of and the in-depth knowledge of VAT, for instance, that's the most trickiest one for me still, and I'm learning each and every day. I did attend some courses to really get a grip on the different tax disciplines, but I'm a senior VP. I don't have to be in detail. I have to build a small team with strong experts, and whenever something is unclear to me, I know who to talk to.
I found it already a bit provocative that you said that TP is an easy one to understand, transfer pricing, whereas I would expect that based on what I saw when I was in-house, that a lot of finance people struggle with it because of the fact that it is so, it can be so abstract. It's obviously very closely related to what the business is doing, and it's very deeply based on economics in general. But that I would expect that maybe finance people find VAT easier than transfer pricing.
Yeah, it depends. Well, for me, TP was easier to understand, coming from an economics background and in-depth knowledge in the business model and the value chain of the company I'm working for. So TP was easier to understand for me, whereas I don't say I'm an OECD transfer pricing guideline specialist. I know how, in theory, it should work. And again, if we are then diving into the different nuances of, for example, financing or service recipients within the group, then the tax experts, they do help me.
Yeah. I read a lot of your LinkedIn posts. I like them a lot. You seem to be a very passionate lady in general about your job. Is it the passion equally spread over finance and tax, or is there a bit of a preference for one or the other?
No, it's there are two hearts in my chest. It's finance and tax. So that's also why a funny side story. When I took over the responsibility for the entire division more than 10 years ago, I renamed the division into finance and tax, because previously it was just called finance, but tax was already included in the area of responsibility. But I renamed it to finance and tax to demonstrate that tax is part of my area of responsibility and is as important as finance is. And yeah, I'm passionate for both finance and tax.
How would you, in general, if you look at your role, would you recommend that more people take up such a combined responsibility? Because based on what I've seen most of the time, there is like a very clear split in a VP for finance, one for tax, one for treasury, and they all report into the CFO, whereas in your case, that is a bit different. Can you explain a bit maybe the pros and the cons that you have experienced already?
Yeah, so let's say it depends on how you define, or let's say what you see in tax. So there are some listed companies, and I would say predominantly in Germany, but you can tell me if it's the same in other countries as well, where tax is a separate discipline reporting into the CFO because of the compliance and the governance function that they see in tax. I say when you really want to make the best out of tax and finance, you better combine, because both of them contribute to add some value to the company. And the evolution at Hugo Boss, the company I'm working for, was quite similar. So tax was a separate department, then it was integrated into finance. Then we tried to separate it, but then we merged it again under my responsibility, because our CFO is also of the conviction finance and tax need to closely collaborate. They're dependent from each other. Let's take, for example, Pillar 2. If you want to get the data, then you better work with the finance team, so you don't have to start from scratch to collect all the relevant data for Pillar 2 reporting.
And I really indeed like the fact that we are so dependent on each other, finance and tax. Pillar 2 is a good example. Tax compliance in general, I think, where very often, there is data that is required. If you look at corporate tax, the statutory accounts is the starting point. And then there is the corporate tax return, and there is a collaboration typically between maybe local stakeholders and the central team. In your case, because your tax and finance people are part of the same team, do you have then specific practices or things that you do different than an organization where it is split? Is there, for example, are they sitting next to each other in the same office, in the same?
They do.
Is it more like mingled finance and tax and not separate, as maybe can be seen in most multinationals?
Yeah, well, it's definitely mingled, and it's not only mingled in the headquarters, it's also mingled in our subsidiaries. Whereas in our headquarters, the tax and the finance team, they sit in the same office space. like literally 2 to 3 meters away from each other. And this is really very helpful, not only for reporting purposes like Pillar 2, but also when it comes to the question, how do I account for a specific benefit in order to make sure that I can properly tax it at the end of the day? And this avoids double work. This helps to increase efficiency and effectiveness, because if, let's say, accounting people know what level of detail the tax people need for the tax filing and the proper taxation of a certain position, then they can integrate it right away, and then tax doesn't have to start from scratch. And that's a huge benefit for a corporation like ours and for any other entity as well.
Yeah, I get it. And would you see people rotate from finance to tax and from tax to finance in your team, or is that difficult?
Let's say the young professionals, yes, they can rotate if they especially want to dive deeper into some tax accounting or TP topics, and then they move to the group accounting team or to the treasury team. The more advanced tax people, especially tax people, are in their career, the harder it is for them to rotate. Yes.
Yeah, I get it. I've heard you talk also already a couple of times around why the tax function should insource more work rather than outsource it, and I like that. It's also it's thought provoking. Can you elaborate on that opinion?
Yes, of course. So. Let's say outsourcing tax to a third-party provider can, in the short term, help you to reduce costs, but in the long term, it will lead to higher costs, because a third-party outsourcing provider or a tax consultancy firm is not as close to the business as an in-house person can be. And if you want to make sure that you're very close to the business transaction and the business people as a tax person, then better be part of the company as such.
Is this about internalizing the knowledge, you mean, and making sure that you invest in it so that you have that internal knowledge?
Yeah, it's about the knowledge about the business model, the knowledge about the responsibilities, the projects that are currently being pushed forward. And it's also about very easy communication with the internal interfaces. And on top of that, let's say, I'm not saying external tax consultants are not specialists. They are, definitely, but they bill 2 to 3 times what a salary of an in-house person costs you.
Are there any tax jobs that you would never outsource?
I would not outsource the tax strategy, for instance, because that's the responsibility of the management. I would not outsource transfer pricing. I would also not outsource not fully outsource tax structuring. Yeah, but these are just examples.
Yeah, those are indeed the
all tax affairs, as you can notice.
Yeah, these are indeed the ones I expected, like the strategy, the bigger projects, whereas probably some of the compliance work or the more straightforward stuff can be outsourced, knowing that you cannot have the resources to do it all internally, right?
Can be, if this fits the general approach of a company. Our approach is not to outsource such kind of things. We're rather investing in technology to make the compliance work as efficient and effective as possible.
All right, interesting. Any concrete example of an initiative that you have taken there, technology-wise, on the compliance front?
Yeah, well, I mean, there are some examples we've invested in the past, namely a transfer pricing documentation tool, to name one example. And we use this to create templates for the local file and just to update it on a regular basis with the transactional figures of the respective entity.
Yeah. All right. That I think is a very nice segue into the main topic for today, which is if we talk about technology, we typically need budget, and getting the budget is for many tax people difficult for multiple reasons. And I know that you have quite some experience and a strong opinion on how to build business cases that are convincing for the CFO. So let's discuss this a bit further. In general, like given that you wear the finance and tax hat, are you a bit more privileged to getting a budget, or what is your view on that?
No, I wouldn't say I'm privileged. Let's say I'd say my competitive advantage is that I have the convincing arguments on my side. So it's much easier for me to prepare a convincing business case eventually than someone else. But I mean, it all starts with what is our ambition? What do we want to stand for as a corporate? And if our ambition derived from our tax strategy is to be a good corporate tax citizen, then this requires resources. And I'm always saying the profit and loss statement doesn't end at EBIT. There's life below the EBIT line. So I'm quoting you, Stevi. And this is for a reason, because we're a listed corporation and our shareholders are looking at the shareholder value. And how is the shareholder value determined? They're looking at the cash flows and the cash flows after tax. So the more professionally we manage our tax expenses, our tax cash outs, the better the shareholder value is developing. So that's why I always say, let's look at this from a strategic point of view. So what do we want to achieve? Number one, we always want to be a good corporate citizen. So that's where the compliance bit comes into. But at the same time, we're a listed company. So we want to increase our shareholder value, and therefore we need to professionally manage our global tax affairs.
Yeah, makes sense. I guess that in your organization, you have managed that pretty well based on what I hear, and your CFO and your management gets it. But what are the main recommendations you would give to people where tax is maybe seen as that below the line function? Like what are the most practical? I like the link to tax strategy and maybe the guiding principles, and keep those top of mind. But anything else which you would recommend for making sure that you are seen as a true business partner, a true driver of value, and not just a below the line item?
Yeah, well, it's I would even call it a cost center. So it's definitely important to highlight where tax is involved. So it's not only managing the cost center with the payroll costs and the consultancy costs, it's demonstrating what the impact of a professionally organized tax department is. And this comes with direct and indirect tax expenses. So really showcasing your success stories, saying, for instance, okay, we did now discuss with the tax authorities in a certain country to get a VAT tax refund, and now we financed our department costs for one entire year, is one example. Or saying, if you have enough resources in-house to set up the Pillar 2 reporting, then you don't have to enter into a very expensive consultancy agreement that costs you 2 to 3 times of internal resources. So it's always showcasing, okay, what are the working fields taxes involved? What are the benefits of having a professionally organized tax department? And what is the alternative? If you don't insource or staff your in-house tax team in a proper way, then you have to go for an outsourcing approach, and that costs you, when it comes to complex tax topics, 2 to 3 times of the internal department. And not doing anything at all is not an option, because then you will have a really high tax risk that comes with penalties, that comes with late interest, and this is not in line with the general principle, meaning being a good corporate citizen.
Yeah. You referred in the beginning of your answer to the fact that you demonstrate your success, your wins. How do you remember them? Because I recall we are all so busy, and you gave one example of maybe a refund or whatever you got. Do you track that somewhere in a logbook with all of the wins, and who is doing that in your team, or how do you practically do that?
I mean, I do have a monthly touch base with our CFO where we then share those wins. So it's only about remembering the last month, to put it that way. And on a quarterly basis, we have a regular reporting to our audit committee. So the committee of our supervisory board, also making sure that we're acting tax compliant. And then on a quarterly basis, I give updates on what are the most important tax topics the supervisory board needs to be aware of. So yeah, these are the formats we're using to highlight what went good, but also where we need to improve. And that's also a very good starting point to start budget discussions, because when you need to improve, because and this happens, there was a finding during a tax audit where you need to improve your routines, your processes, your systems, then this is the starting point for a budget discussion. And then you can always discuss insource, outsource, make or buy. And we then prepare the different business cases for both options. And most of the time, the more convincing business case is the insource case.
So you have that monthly touch point with the CFO where you then discuss wins, but then also if there are risks or potential exposures, quantify them maybe as much as possible, and then make sure that on the back of that you build up and that you then can work towards business cases. I see questions coming in, so maybe take a minute here for one of the questions. Why do you feel that tax elements are more readily outsourced than, let's say, accounting functions? Why is accounting always insourced, or in most of the cases, whereas tax sometimes?
No, I didn't say that tax departments or the tax function is more readily outsourced. The same applies to accounting. I mean, it's a general question that each and every corporation needs to ask themselves. Do we go for an insourcing approach or to an outsourcing or eventually a hybrid approach? Let's say accounting, to stick to that example, because they're paying invoices, they're collecting money, it's easier to understand than what tax is doing. And that's why I'm saying you really have to promote what an in-house tax department is doing, where they can add value to the entire organization. And the closer they are to the business, the more value in-house tax people can add. Because then if they, let's say, have a good connection to the business department and have the perception of being a go-to person in case of tax questions, then they can start right at the beginning of a project to add value and not clean up the shit at the end of the day if something went wrong. Sorry for the wording.
No problem. Yeah, and you're right. I think that sometimes the complexity of the tax domain makes that, we are not being understood by our stakeholders, and that people think that we just put numbers in boxes, whereas finance is very straightforward and easy to understand. To your point, they pay the invoices and so much more. But that's a good one maybe to take away, where this is all about ensuring that our stakeholders understand what we do and what value we on the day-to-day.
You have to promote yourself in a way that business understands. And that does not only apply to tax. This, of course, also applies to finance, because, I mean, paying the invoices is an easy one to understand. But take, for instance, group accounting, where you then collect a number of financial statements of the subsidiaries and then prepare a group financial statement. This is now then also harder to understand. I mean, the more subject matter expertise a finance or a tax discipline requires, the harder to understand for the business departments. And therefore, you have to really promote yourself, what you're doing in a way that everyone understands.
Got it. Other question was like, why are tax teams mostly smaller than finance and accounting? A good one, I think.
It's a good one. So, Stevi, what would you say with your experience you gathered? I can only speak for Hugo Boss. You can speak for many more corporations.
Well, I think the reason being that in all your local entities, they need some local finance profiles because there is a local language and there are local obligations, local compliance, and it can be stat accounts and whatnot. And typically, I think, because you have locally a finance profile for all those legal entities, typically they take on some of the tax work then in compliance matters, which makes it you can live with a fairly small central tax team and then a kind of a shadow tax team, which is a bit spread over finance and maybe the advisors as well. But I think the reason being of the why the finance organization is larger is because you need your local boots on the ground from a finance perspective. You need those local gatekeepers. Anything I missed there, Katharina, or any other arguments that you would think?
Yeah, I would add one perspective, one more element, and this is the frequency. So let's say you're paying invoices on a daily basis or once a week at least. You're preparing monthly closes 12 times a year, whereas let's say in terms of tax accounting, I doubt that every corporation is preparing a full-fledged tax accounting on a monthly basis. The frequency is less, but the subject matter expertise, of course, is much higher. So that could be a reason.
Yeah, makes sense. In your view, or what you have seen also maybe in your organization, but hearing from peers as well, is the CFO treating tax as the little sister or of finance, or maybe the stepchild in the CFO office? What is your view on that? Or
not in our company, no. Because the good thing is our CFO is a certified German tax advisor,
which is very unique, no?
Yeah, eventually that is a huge advantage, but no, tax is not treated as the little brother or sister or stepbrother. No, I wouldn't say that.
All right, going back to the building of convincing business cases. How to get started? Say you have indeed identified a risk, something for which you need technology, automation. What are the first steps to take when it comes to building a business case that is a no-brainer for the CFO to approve?
Yeah, so probably most of the audience just went through or is in the middle of the budget phase for the next year or the upcoming years. So it always starts with a question: what do I need to be successful, to thrive in a project, to thrive in the midterm with an in-house tax department? So you have to ask yourself, what is on my agenda today, tomorrow, in 12 months, in 18 months? What do I need to accomplish? And then you ask yourself, okay, this is, you do a stock take, this is your team, these are the resources you have available, and then there's a resource gap. And then you ask yourself, so either I can do this with strengthening my in-house team by hiring additional people, implementing a new software, or I go for an outsourcing approach or a consultancy approach. And then you put price tickets to the different scenarios, including, let's say, the hard facts, but also the soft facts. So meaning, what is the most sustainable solution to thrive in the long term? What I mentioned earlier, I am convinced that an in-house person is the one that is closest to the business and that can not only add value for a specific project, let's stick to Pillar 2 reporting, but also add value going forward by improving processes, being much closer to the business. And then you elaborate on the different scenarios, put a price ticket. So what does it cost? What are the benefits? What are the benefits also in terms of numbers? And this is what then is pitched with the CFO that ultimately approves your budget.
Can you give some more examples of, because I see very often that business cases which are built by tax people, they mostly focus on costs, and then the costs can be like either risks if they crystallize, or maybe efficiencies which you can realize by doing more with less, automation technology. if you look at like revenue or income or like benefits, are there any examples you can think of how in a business case you can demonstrate that if you do this, it will also result in top line growth? Do you have some concrete examples of, or have you seen some of these arguments in business cases?
Yes, I know what you mean. So let's say it's not, and this is exactly what I tried to elaborate on earlier. Tax is not only a cost center. It can, let's say a properly staffed tax department can make sure that you have all the risks under control. You can avoid tax audit findings. You can avoid late interest penalties if done right. Let's say it all ends up in a professional steering of the effective tax rate. And the better you steer your effective tax rate, the more taxes you pay, to put it that way, and the more predictable your tax rate is. So, and this is, let's say that this is for me the most significant benefit of a professionally organized tax department, to always say, hey, it's the tax department is managing a P&L line item, and that is the tax expenses. And the tax expenses, they determine how much profit after tax remains in your profit and loss statement. And this determines how much dividend potential then ultimately remains, and how the shareholder value is developing. So I'm always trying to explain it with that simple, very holistic approach. And this very, very often helps.
Yeah, and ETR is one of the most, I think, straightforward KPIs. What are the other KPIs that you think are very useful to track as a tax leader?
Yeah, well, of course, cash taxes are very important. Talking about cash flows, then of course it's time to tax filing, number of tax audit findings, the amount of late interests that have to be paid on tax findings. These are some that can be tracked, just to name a few.
And how do you manage in practice time to tax filing? I think that's an interesting one. But I'm curious to learn here. How can you track that?
Yeah, I mean, just to put this into perspective, we don't have yet a fancy dashboard where we can then all track the KPIs, but that is something we really aim for in the future. Let's put it that way. So the time to filing, we do have an ambition level, and our ambition level is that tax filing, as well as the TP master file and the local file, are integral part of the year-end closing activities and are done within the very same time frame as the local statutory account of a subsidiary, because then you can then tick off the fiscal year and move on with whatever lies ahead of you.
I like that. That's pretty ambitious, but I like that because the more you let it linger, the more hard and painful it becomes to then ultimately do it, right? What are the other benefits of having it done as a part of the year-end closing activities, or the activities which are maybe linked to the preparation of the statutory accounts? Any other benefits you can think of, making sure that you also then do your corporate tax and your transfer pricing documentation at the same time?
Yeah, let's take corporate income taxes, for instance. Then you do have, as let's say, finalizing your corporate income tax filing in the same time frame as your local statutory accounts gets you closer to the fiscal year, and make sure that you don't experience any nasty surprises throughout the year when it comes to the tax provision. Then you know, okay, that's finalized, and you can then also steer your tax advance payments or prepayments in a better way. So also cash, let's say cash tax steering, it's much better to be closer to the previous fiscal year and to tick off those compliance requirements in due course.
Yeah, I get that. And haven't you experienced that in some countries maybe the returns are not even available, that your team is then too fast with the work
yes,
that the filing
yes,
cannot happen yet?
yes.
Any war stories there?
Yeah, actually, in some markets we had prepared the tax filing, and we were waiting for, as you just said, we were waiting for the form to be published so that we can then hand in what we have done.
Yeah. All right. So we discussed the ETR, cash tax, time to value. I think you also referred to risks. So most of them are I think, quantitative value drivers of the business case. Any qualitative ones? You said like how the business case can also then help you to achieve your strategic goals as a tax team. You referred to in the beginning. But any other qualitative value drivers you can think of when building a business case?
Well, I mean, what is very important for me, and I'm always looking at the 360-degree measurement of success. So it's not only the quantitative KPIs. So no matter if it's finance or tax, what can we contribute as value for the company, but also from a qualitative point of view, I very much like to look into employee engagement, average attrition rate, then customer satisfaction, whereas we do not measure this with the Net Promoter Score. But I have some data points where I say, okay, I have dedicated people working with the business, and they are now pulled into discussions regarding ideas, not even projects. It's project ideas, and the fact that they already talk to the tax people in the ideation phase gives me the confidence that the tax people and also the finance people are now very well accepted by the business interfaces.
Yeah, makes sense. And that is indeed like the more you can upstream your tax department and bring it closer to the business, the more value you can drive. I like also the Net Promoter Score and or in any case, like gaining feedback from the business on how your tax team is doing as a service provider to the organization. That's an interesting one. Going back to the business case and the building of it itself, any other particular do's and don'ts that you have seen, things that you would highly recommend and things that you would highly not recommend, knowing that you with your finance and tax background, you have a bit of a specific view on such a tax business case?
Yeah, I mean, we elaborated on this earlier. For me, it's really important, and you also mentioned that, do not only focus on the risks and the costs of the tax department, but factor in the benefits of a professionally organized tax department, and do this by looking at the KPIs of the company you're working for. So yes, tax cannot push sales, but you can make sure that EBIT is can be managed, because employment tax, value-added tax, these are taxes that affect EBIT. And we're not only talking about the corporate income taxes. We have not even talked about customs duties. That's also a very important element. So my recommendation is not only concentrate on the cost and compliance side of the tax world, really highlight the benefits and the value a tax department can add to a company in terms of shareholder value. And this by really knowing the business model and the KPIs of the company you're working for.
Yeah, makes sense. And so you refer to customs and maybe other above the line taxes. Where does the responsibility of the tax team stop? Like local taxes, environmental, property taxes, production taxes? Is that also under the responsibility of tax?
No.
And is it something where we can drive value? No?
No.
Why not?
I mean, yeah, you can tax the entire world, definitely, but I think they're more specialized people. So I'd say concentrating on VAT, employment tax, corporate income tax, transfer pricing, and tax accounting is the core business of an in-house tax department. In some corporates, you also see customs duty being integrated into the tax department. In our case, it's not. It's in the logistics department. But yeah, I mean, you could integrate literally every tax type into the tax department. But then the question is, does this really make sense? Because you also have to find the experts for those different tax types.
But then I have maybe two counter arguments for which I'm curious to get your feedback. First of all, if shit hits the fan, and this time, sorry for my language, but if shit hits the fan, won't it be ending up on the desk of the tax team in any case? Say it's a huge local tax audit on property taxes, which were initially not under the responsibility of your team. Will it not end up on your desk in any case?
Not necessarily, but very often it lands on my desk, yes.
and that is why I would think like it's at least good to have a bit of a view on what's going on. Maybe you should not be involved in preparation and filing of returns, if any, because you don't know with all the specificities of those local taxes, but at least that you have some view on, has it been filed, yes or no? And maybe my second counter argument, and this is maybe the more important one, what if the CFO asks you, hey, what is our total tax footprint? What do you then want to include in that? Because in the end, it's an important metric as well, I think, as an organization to demonstrate multiple things, among others, also what you give back to society as a company. But there, I think if you add up all those small taxes, it can be still a big chunk.
Yeah, you're absolutely right. So the good thing is we know where to get the numbers from. But I would really rephrase a little bit and say, well, tax is a governance function. And this doesn't necessarily mean that you own all the taxes. You simply cannot if you're too far away, but you can at least establish consistent governance principles and educate the organization what is important to be compliant, meaning hand in filings in time, have a proper documentation in place. Of course, know when there are changes in the regulations. I mean, these are the fundamental principles of an in-house tax department, and by sharing this with the operational departments that eventually then own or are in the driver's seat for property taxes, for instance, that helps a company to be a good corporate citizen. But that doesn't necessarily mean that the core in-house tax department needs to own all tax affairs.
Yeah, makes sense. It's maybe a nice link into one of the questions that came in, like what role do tax incentives play in supporting sustainability initiatives? Is there a link between tax incentives and maybe any of the ESG goals in general?
Yeah, as I'm also owning the CSRD implementation, I could talk for hours how important it is to have a proper non-financial reporting in place to take deliberate decisions to make an impact. And yes, of course, tax incentives could play a role in this regard. But I'm convinced that as a corporate, you really need to know your non-financial KPIs. You have to define your non-financial strategy, and then deliberately decide on which are the KPIs you want to make an impact for the better, meaning being more sustainable. And if there are tax incentives out there for, let's say, for instance, I don't know what's the correct English wording, to change the energy supply to green energy, then you should take advantage of it.
Clear, all clear. Wrapping up on the business case here, so you have mentioned some of the do's and don'ts that you would definitely recommend. Is there any final thing you want to share here with the audience on how to build the best and most convincing business cases?
Learn to talk business. I mean, the better you talk business, the more convincing your business case will be. So, and this, I'm always saying tax in-house people, they need to be multilingual. So on the one hand side, be in a position to talk business with the business people and the CFO, of course. And at the very same time, be in a position to talk tax with tax advisors, tax auditors. So you need to be multilingual. And sometimes this needs to really switch gears in your brain and reflect, okay, who am I talking now? And this is something tax people really need to integrate into their DNA.
All right, so learning how to talk business. Let's definitely keep that top of mind. Finally, is there one piece of advice that you want to give to all of the in-house tax people here on how to excel in their careers, how to get the most out of their career?
Yeah, I mean, always stay curious and look left and right and what is happening around you. So being an in-house tax department doesn't mean you're living in an ivory tower and the tax laws are your shield and protect you. Mingle with the business people, mingle with your most important interfaces because you're part of a living corporate ecosystem. And the more you collaborate, the more you promote what you're doing, the better your interfaces can understand what's your role within that corporate ecosystem. So always have this in mind while pursuing an in-house tax career.
Fantastic. Love it. It's very straightforward, clear, and I think easy to implement, or in any case, feasible to implement. So thanks for sharing that, Katharina. I really enjoyed the conversation. I hope the audience did as well. So again, thanks a lot for being here with us, and let's have another episode on this, maybe in the later stage.
Yeah, it was a pleasure, and hope that there was something in for the audience.